Good evening. Good evening and welcome all of you who've joined us tonight. I am Beverly Brown Ruja. I'm the Financial Justice Program Director for New Jersey Citizen Action. We're a statewide nonprofit organization advancing policies for social, racial, and economic justice in New Jersey through advocacy and direct services. So I am delighted to be here tonight with Winston Berkman-Breen, who is one of the most knowledgeable and hardworking advocates for student loan borrowers in the country. He's also been a critical partner to those of us in New Jersey working on behalf of student loan borrowers in this state. Winston, welcome. Thank you for joining us tonight. There's so much to talk about, and we know that the participants are particularly anxious to hear about the kinds of student loan issues that are affecting them. And there have been so many changes to the federal student loan system over the past 5 years, and especially since the pause ended for repayment in October of 2023. Can you talk a little bit about and remind us briefly about everything that's happened to get us where we are today?
Yeah, definitely. Well, thank you so much, Beverly, for inviting me, and to New Jersey Citizen Action for hosting this. I mean, you sort of said it already, but this really is a wild time and a sort of scary time to be a person, but a student loan borrower for sure. There is just so much change happening, and it's hard to keep track. And even if you are keeping track, sometimes it feels or is impossible to get done the thing that you're trying to get done. So we'll talk all about that, but I do want to take you up on the offer to sort of remind people how we got here before we get to some of the concretes about, where here is and where we're going. So, without going into the whole history of the federal, this is not a seminar or anything like that, but, the practical relevant facts are when COVID hit in March of 2020, the federal government, Congress, and then the president extended this a few times, paused student loan payments for federal student loans. Remember, federal student loans, unlike most other debt you have, federal student loans are owed to the government, so they could make the policy decision that it was helpful to borrowers during the economic and public health crisis of COVID to pause payments. So that pause lasted from March 2020 through October 2023. And then we had and during that time, no one had to make payments, no interest was accruing. And if you were someone pursuing one of the sort of debt cancellation forgiveness programs like public service loan forgiveness, which we'll talk about, that time counted. Once payments resumed, we then had a year of what was called the on-ramp, which was October of 23 to October of 24, where you had to make a payment, your interest was accruing, you got a bill, but if for some reason you couldn't afford it or you just otherwise weren't making payments, you weren't going to be penalized in the way that you would be today, which we'll talk about. Your interest was accruing, so your balance would go up, but you weren't going to be declared delinquent or in default. You weren't going to get negative credit reporting, and you weren't going to experience sort of debt collection by the federal government. That on-ramp ended in October of 2024, and I know we'll chat a bit about this. So now all of those repercussions of falling behind on your loans are back in effect. So although that was almost, a 4-year pause for borrowers, a lot happened in the student loan system despite the pause. So during that time, some of the major student loan servicers, the companies that actually handle your federal loans or a federal loan, but these private companies are the ones doing the day-to-day work, interacting with you when you have a question, maintaining your records, applying payments. Some of those major companies left the student loan servicing system. We're talking about FedLoan, we're talking about Navient, we're talking about a couple other big companies you might have heard of. That means their accounts had to go to other companies doing this work. So people's accounts were getting transferred around. You as a borrower might have experienced this and gotten over the last 4 years, maybe more than 1 or 2 notifications that your loan was being moved, right? The federal government still owns your loan, but the company that you interact with would have changed. And that's really confusing for people, especially when the pause ended. They were like, well, who's this new company? I was working with this other company the last time I made a payment. Also during this time, we had a lot of policy changes. People probably read about and maybe were really counting on President Biden's debt cancellation efforts, right? It seems like so long ago now, but President Biden proposed using his executive authority, very similar to the authority that the Trump administration, the first time around, and the Biden administration also used to sort of pause those payments, to use some of that similar authority to cancel up to $20,000 of debt for what would have been about 90% of student loan borrowers based on their income. This ultimately got struck down by the Supreme Court in May of 2023. So, just about 2 years ago. So that was one big policy issue that people may have read about. Immediately after that, the president introduced, as almost every president before him has, a new type of income-driven repayment plan. And we're going to talk about the income-driven repayment plans tonight, but that was another thing you might have read about, something called the SAVE plan, the Saving on a Valuable Education plan, that was going to be the most affordable repayment option ever. That was introduced in 2023, and then a bunch of conservative states sued in 2024, and that plan has been caught up in a lawsuit and has been unavailable since about a year ago. So we'll talk about that, but about 8 million people are sort of in this limbo while that plan is unavailable. So that was all happening. And then another thing that happened during that pause was the Biden administration, I'll talk in more specifics about this throughout the call tonight, fixed a lot of programs that had not been working very well. So a lot of people actually did get their debt completely canceled, which is phenomenal. Over 1 million people, over 2 million people, I think, ultimately got their debts canceled. And this is their debts being canceled under federal law. Their debt should have already been canceled, and there were issues. And so the Biden administration used the pause as a chance to do some cleanup and get those people's loans totally forgiven. And then the last sort of how do we get to where we are today is that, as I mentioned, that on-ramp ended. So now we're sort of back to a system where it's almost like February 2020, like things are in theory working at full speed ahead. People are getting bills, they have to make payments. If they don't make those payments, they're going to experience the negative effects. And we'll talk about defaulting and what that looks like tonight with you, Beverly. The final thing that I'll flag as just, it's never over with this federal student loan system is that there have been announcements about potential further changes, which we'll flag tonight. None of those have taken effect, but unfortunately, people are going to have to continue tuning in to figure out what's going on with their student loans.
Thank you, Winston. I think you made it clear that a lot has gone on. And just to back up a little bit, I mean, one of the things we know is that when, a lot of borrowers have always struggled, or some have struggled to afford their loans, and they rely on some of the more affordable monthly payments through the income-driven repayment plans. So, you mentioned that, but could you talk a little bit more about that? Can you sort of summarize what those plans are?
Yeah, of course. So when you take out a loan with the federal government, so we're talking all about federal student loans tonight, not the private student loans that some folks may have. But when you take out a loan with the federal government, you're going to be defaulted onto what's called the standard plan, which basically just says how much are you going to have to pay back and how long do you have to pay it back. And we're going to chop that up into monthly payments. So you're going to have fixed rate monthly payments that add up to the total amount you owe over typically 10 years. For some people, that's not affordable. And so there's an alternative set of plans that's generally referred to as the income-driven repayment plans, or IDR plans. You hear sort of people refer to IDR. And what they look at is not how much do you owe, but how much do you make. And what we're going to do is take a percentage of your take-home income that is calculated using a specific calculation that's sort of separate from your taxes. It looks at, it takes into account how much you make above the federal poverty line, which is a government published figure every year. And then it takes a percentage of that. So in theory, it's more affordable because it looks at your income. I want to acknowledge that in practice, it's not always affordable to a lot of people, but it is supposed to be the affordable option. So what under these IDR plans, you're making a typically lower monthly payment based on your income. Sometimes that payment isn't enough to even cover, it's the legal payment you're asked for, and if you pay it, you're good to go. But sometimes it's not even enough to cover the interest that's accruing on your loans. So when that happens, you're making your monthly payment, but your balance will keep going up because interest isn't getting paid down on a monthly basis. Because of that, to prevent people from being stuck in like a literal debt trap, right? Your balance is always going up and up and up, even though you're making payments. These IDR plans all have a feature where they cancel your debt after a certain period of time, typically 20 or 25 years of making payments based on your income. And again, the reason for that is at a certain point, you would just be paying into perpetuity. So they have to sort of cut it off at some point. So again, the features of an IDR plan is that it's a lower payment based on your income, and that after a certain period of time, the debt should be canceled. Now, that cancellation provision was one of those things that Biden tried to fix. So before the Biden administration, in the history of the IDR plans, about 30 years, only roughly 100 people had gotten their debt canceled under that, right? That's not clearly something's not working here. It's not an individual person's fault at that point. By the end of the Biden administration and the fixes, that number was up to 1.4 million, right? So clearly, there were some efforts to improve that program. Now, the IDR plans, again, these are repayment plans. You sort of submit an application or talk to your servicer to get into them, have distinct names. One of them is the income-based repayment plan, or IBR. One is income contingent repayment, ICR. One is called pay as you earn, or PAYE, pay. And one is called revised pay as you earn, or repay. They all have slightly different features, slightly different eligibility, slightly different repayment amounts or cancellation timelines, but they are all that same function and formula of a payment based on how much you make, not how much you owe, and cancellation at the end. I will say that the repay, that REPAYE, was renamed and converted into that new repayment plan SAVE that I mentioned that many of you may be enrolled in, that is now caught up in the court system in a lawsuit. So, the plans are, as they stand today, IBR, ICR, pay, and SAVE, formerly repay, although SAVE is not really available for folks to make payments on.
That's a lot. So, part of the reason that so much of this is in limbo is that recently there have been a number of lawsuits that have been challenging the IDR plans. Can you explain a little bit about, the status of the lawsuits? And I mean, that sort of explains some of what you just said about you can't have access to certain programs. But
Yeah,
could you talk a little bit about the lawsuits?
definitely. So the lawsuits were a group of 18 conservative states sued about a year ago over this SAVE new IDR plan. And their lawsuit basically said, and I'm not really being glib, that these plans are too affordable and too borrower friendly, and the states will somehow lose money as a result of that. So it was a really callous lawsuit because it was the states suing to stop a benefit that their own residents who have student debt would have benefited from, right? So unfortunately, the legal system allows for that. The political system, I think, shouldn't allow for that, right? People should hold their lawmakers accountable if their attorney generals accountable if they're doing litigation like this, but they sued. And one of the things that they challenged was this cancellation aspect of the IDR plans that I mentioned, that your debt can get canceled after a certain period of time. And the courts have actually jumped on that, even though Congress included that in the law that allows for these IDR plans. The courts are questioning whether that is permissible. And so, it's been appealed and brought back down and appealed again, and this is ongoing litigation, but it should only affect that one plan, the SAVE plan. That's because of the way the lawsuit was structured. The other plans should be available. Unfortunately, they were all taken offline recently in February of this year. You may have experienced this if you were trying to access an IDR plan for the first time, or if you had been stuck in the SAVE plan. If you were in the SAVE plan when this lawsuit started, as 8 million people were, when the courts said, I'm not sure if this plan is legal, we need to figure it out, they also said, in the meantime, we're going to cut off access to this. So no one has said any aspect of the SAVE IDR plan is illegal, but they have said, while we're figuring it out in court, the Department of Education can't offer it to you. So if you were already in it, you're going to be put into a special forbearance, which means you don't have to make payments and your interest won't accrue during this time, but you're basically being held on ice. So for 8 million people, they've sort of been on ice for about a year. For the other plans, there should be no effect on them. That's the IBR, ICR, and pay. However, in February, the Trump administration did take all of the plans and the applications for them offline because of this lawsuit. They said, oh, well, we can't offer these right now. The court said we couldn't, which wasn't accurate. My organization represented the American Federation of Teachers, the teachers union, and we sued the Trump administration over this very issue, access to these affordable plans. And a week later, they restored the application to those other plans, IBR, ICR, and pay, and started processing those applications just this month. the AFT, our lawsuit against them is ongoing, so we want to make sure they do this right. As of today, there's a 2 million borrower backlog to get into an IDR plan. So again, these are supposed to be the affordable plans. Payments have resumed. You're going to get in trouble if you don't make a payment. But if you want an affordable payment and you don't have one yet, you've got to apply behind 2 million people. So it's, a very frustrating place to be in. I will say they're going to start processing faster. And while your application is being reviewed, you can ask for forbearance so you don't have to make payments while you're trying to get on that affordable plan. But just another instance, Beverly, of how confusing and quickly these things are changing. So I hope that my answer didn't, make things more confusing for people.
Well, I mean, my takeaway is that, I know you're going to talk about more what people can try to do in in their personal situations, but is that unfortunately you have to sort of follow what is happening as they make these changes. Congress is proposing changes, yet more changes, I believe, to the system. And so it's going to be important. We'll have to do more webinars and make sure that people stay up to date. I do want to just mention to the audience that we're going to move ahead and we will try to get to some of you submitted questions in advance. So Winston is aware of those. So where there's commonality, he's going to cover a lot of that, but I'll get to some of the questions that were submitted. And then we'll also, if we have time, we'll take a few more if we can. So Winston, just to summarize this section on the IDR, what is your suggestion that, for the people who are struggling, given all of the uncertainty about what is going to happen with the programs and the backlog to sign up? What would you recommend that people do?
Yeah, so let me just, because it is a lot to digest, sort of really quickly synthesize. If you're someone who's been in IDR for a few years and you're not in SAVE, you've been getting the bill, you've been paying the bill, there's nothing you need to do. Normally with IDR, you have to recertify your income annually. Those deadlines have all been pushed out. So if you're someone who's getting the bill, paying it, and doesn't have a problem, nothing you need to do right now. Even if you're technically in an IDR plan, just continue on. If you're someone who is getting the bill and you can't afford it, and you're not already in an IDR plan, I recommend that you go and apply for one. You do this through studentaid.gov. If you don't have your studentaid.gov information, make sure you get it. That's your portal for all your federal student loans. And when you're applying, it should show you, we're unfortunately hearing that there's some inaccurate information about what they're showing you, but they should show you the plans you're eligible for and what your payments would be, and you can apply for the one that's most affordable to you. And then ask for forbearance in the application while it's being reviewed. So that'll both give you a little bit of breathing room while they process your application and hopefully get you on a more affordable plan. If you're someone who was in the SAVE plan and you're in that pause because of litigation, this special litigation forbearance going on a year, your interest isn't accruing. This is an individualized, advice, so I can't give it to in general, but if you're someone who expects to have to pay off your loan at some point, you're not seeking public service loan forgiveness and you just need to make payments, but you want to save some money right now, it's totally fine to sit in that interest-free forbearance, save your money, save your income, and then be ready to start making payments. If you're someone who can't get stuck in this, you want to work towards public service loan forgiveness and get rid of your debt as quickly as possible, or if you just want to start throwing money at it and making payments, then you should switch to another IDR plan. You should apply to one of the existing ones, IBR, ICR, or Pay, based on your eligibility through the online application. So it's going to depend on what your circumstance is, but the bottom line is if you're struggling to make payments, either because you can't afford them or because the government's not billing you, you probably should apply for another IDR plan and then wait while your application's processed.
Okay. So there's, for those who are in that forbearance, who are in the SAVE, they're not accruing interest right now, but they should still look into and investigate whether they should just sit and wait or whether they should be
Yeah,
applying
because
for
it's
these
going to
other
depend
programs.
on your personal finances and personal plans. If you want to get public service loan forgiveness, that time is not counting towards that. So you might want to switch into another IDR plan because those will. But if you're someone who is going to take advantage of that zero interest forbearance and maybe just make payments that go towards your principal, they're not a monthly payment, but you're just going to throw money at the principal and eat away at it, or you're going to take advantage of not having to pay a bill and just save money, save money, save money, and then have a little bit of a nest egg for when payments resume. That's going to depend on your circumstances, but that's why I think it's worth looking into what your options are if you're in that forbearance. I mean, my advice to everyone for every issue is look at your account and really take ownership over what you think your circumstances are. Don't just tune out because it's confusing, right? And so this is a similar instance of look into it and figure out what's going to be best for you.
Thanks. So let's move on to public service loan forgiveness, something that we worked hard on, I know, in New Jersey to really make sure that people were aware of this program. A lot of people know what it is, but could you just describe briefly for those who don't what the public service loan forgiveness program is?
Right. So public service loan forgiveness was created through an act of Congress in 2007, and it basically is a program within the federal student loan system that says if you work in public service, which is government or nonprofits, for 10 years and you're making payments on your loan for that 10 years while you have the right job, after 10 years, the government will forgive the rest of your debt. There are some important eligibility requirements along there, but that's the general promise, right? Work in public service for 10 years, make payments, get your debt canceled. This is another program that historically did not work well at all when that first, was created in 2007. So in 2017 and 2018 is when the first crew of people hit 10 years. We saw some really abysmal rejection rates, like people were just not getting their
Yeah.
debts canceled. So up until COVID, really, only 1,500 people had gotten their debt canceled through PSLF. Again, Biden used the pause as an opportunity to fix some of these, just make the congressional program work better. And by the end of the Biden administration, over 1 million people had their debt canceled under public service loan forgiveness. Again, this is like teachers, government workers, public health practitioners working for the government or a nonprofit. So again, it's a great program. You have to have the right kind of job, the right kind of loan, be in the right kind of repayment plan, which is mostly going to be an IDR plan like we just talked about. So there are some steps you have to take. The final thing I'll say about PSLF that some people get confused about is it takes 10 years to get all the 10 years worth of payments, right? That makes sense. It takes 10 years to accrue 10 years worth of monthly payments, but it's not, you can never be late to apply to it. It's not a program you have to necessarily apply for. Basically, you're only ever documenting your qualification. So you could wait the whole 10 years before ever submitting your PSLF forms to the government. And as long as you can show you had the right kind of job, they have all your loan records. As long as you can show you have a kind of job for 10 years, you get your employer or multiple employers to sign off on it, you're good to go. We recommend people submit those forms on an annual basis, get your employer to sign off that you work there on an annual basis, because the government will track your progress. And so you can see, oh, they've matched up my employment records with my student loan records and approved me for a year of credit, 2 years of credit. And now I can see I'm only 1 year away from 10 years. So we think it's really, really important to do that annual PSLF paperwork so you can, root out any issues early on and know how close you are. But I just want to assure people you're never late to do it, right? You can do it on the 120th 10-year equivalent payment and still be good to go.
I think the only thing is then you have to go backtrack and make sure you have everything.
All the more reason doing it in real time.
Right. Yeah. We would recommend that you do it as soon as you can. And we did see, as the Biden administration tried to and did successfully get that program up and running, as it should have been, we saw so many people in New Jersey take advantage of that program, and people saved anywhere from $2,000 to $300,000.
The average debt saved across the country. So over 1 million borrowers had their debt canceled as of a couple months ago via PSLF, totaling $80 billion in debt being canceled. The average person had $73,000 canceled.
It was once the program started working, it really was working and was a huge benefit to a lot of people in New Jersey. And I just want to echo that you need to make sure that your employer, is verifying the time that you're working for an eligible institution, because there's certain types of institutions that are eligible for this. But right now we're hearing that there are borrowers who they think they should be forgiven, but they've been waiting for months for their applications to be processed. And what would you recommend that they do? Do you think is the program going away? The new administration has different views on this program. So what should people do if they're waiting a long time, and do you think the program will continue?
Right. So technically, despite all the other changes going on in the world, technically the PSLF PSLF program is not experiencing any changes. It is running as it is supposed to. In practice, it's a little bit impeded because the way that most people, again, I said you have to have the right job and you have to make payments for that entire 10 years. You have to make payments on a certain type of payment plan, right? Lest this be simple, like it's always a little complicated. One of the plans that most people use is that SAVE plan that's hung up in the litigation, right? So if you're one of the 8 million people who are in that SAVE litigation pause and you are trying to get public service loan forgiveness, those paused months are not, this going on a year, are not counting towards PSLF. They are not being counted as a payment towards your 10 years. So that is one way in which practically the program is being impeded, even though the rules of the program are not being impeded. So we'll flag that for people. But one opportunity there that was just clarified in our litigation with the American Federation of Teachers is that there is a new program within PSLF that says, it's called the buyback program. You may have heard of it, or the reconsideration, which basically says if in your entire time you've been doing public service work, if there was a month or multiple months that you missed a payment or you made a payment on an ineligible plan and for some reason your payment wasn't counting towards PSLF, today you can make a payment equivalent to what you would have had to pay then, and we will honor that past month. So you can buy it back. That's why it's called the buyback program. And what the government just did is they just confirmed that if you can buy back these SAVE forbearance months. So the fact that the government is basically involuntarily putting you in a forbearance that you didn't ask for, they're saying, all right, well, if you want to make a payment for each of those forbearance months today, we'll retroactively give you credit for them. So if you're someone who should have your PSLF cancellation, were it not for these months you've been put in limbo, you can apply for that buyback. They'll tell you what payment you need to make, and then you can get your credit. That's like the practical change. Now, we are hearing from people, as you said, who said, oh, well, I applied for PSLF and my application is pending. It's been 5 months. What do I do? We are hearing that there's just been a slow up on these application processing. I think a common refrain you're going to hear from me is that when there are issues like this, trying to file a complaint is a helpful way to like sort of jiggle things loose. This administration is not being as transparent or as borrower friendly or doing as much borrower outreach as the Biden administration did. And so what we have been hearing is actually most effective is to file a complaint with your member of Congress and have your member of Congress open a constituent complaint case file, basically, and then they reach out to the Department of Education to say, hey, my constituent said they're having this problem, look into it. We can share it with New Jersey Citizen Action to send to everyone after this webinar, along with some other resources. But my organization, the Student Borrower Protection Center, created, we're calling it a toolkit. It's really just a step-by-step guide for how to file those complaints to your member of Congress. And New Jersey has some responsive members, some good representation on the Hill in DC. And so if you're someone who has one of these pending applications and you're like, Winston, I filed the thing, what else am I supposed to do? I recommend these days that that's what you do, is that you file a complaint with your elected official and ask them on your behalf to see what's going on with your application. But then the program itself, there's nothing on the horizon that would dramatically change it. Congress is changing all sorts of things with some of their budget stuff, but PSLF was not included in that. The Department of Education has indicated it's going to start some changes to the rules of public service loan forgiveness. We anticipate those rules will not be legal and they'll be illegal and they'll be challenged pretty quickly. And so I think at the end of the day, and pending that potential new rule, we won't practically have any change. People will be able to proceed with like the robust program as it is, even if this administration is trying to narrow it. They're not going to have the legal authority to do that.
Thank you, Winston. And there's some specific questions about this that so the audience knows I'm going to come back to these questions and Winston will be able to drill down a little bit more based on your specific questions. But I do want to move on to default. Last month the federal government announced that it was going to start collecting from borrowers whose loans are in default. Can you talk about what that means? What it means to have a federal loan in default, and who these borrowers are, and what collections look like, because that's a whole nother issue. Um,
Right.
and if someone's in default, what kind of options do they have?
Definitely. So, what does it mean to be in default, right? You might be someone who has multiple loans, right? A car loan, a private student loan, a federal student loan, a credit card. Default's going to mean something slightly different for all of these. But for federal student loan, default means that you are 270 days past. As soon as you miss one payment, you're going to be considered delinquent or in delinquency. But once that delinquency hits 270 days, then you're going to be considered in default for your federal student loan. Um, Now, who's in default right now? So because of that staggered reentry to repayment that I mentioned, the payment pause for COVID, and then the on-ramp when they weren't letting people get delinquent and fall into default. Um, if you're in default today, that means that you're someone who was in default before the COVID payment pause. So the population of people from before March 2020 who are in default, some of them got help through the Biden administration and are no longer in default. But everyone who's in default today, almost by definition, would have been in default um, before COVID. And that's because between October of 2024 and now, there just hasn't been 270 days. Like the math
Yeah.
doesn't math, right? You can be delinquent, but you can't be a new defaulter yet. So there's 5 million people of the roughly 40 million people with loans. There's 5 million people who are in default. However, we have 8 million people who are already delinquent and headed towards default. And 6 million of them are already seeing credit score damage. So they start, even though you're not in default, if you're delinquent 60 days, they start reporting to the credit bureaus that you're behind. So what is that? 3/4 of the people who are delinquent are more than 60 days, right? So they're heading towards default. So who are these people, right? So of the people in default, um, some of them are older. So of the borrowers who are older than 65, 40% of them are in default. Most people, roughly 40% of borrowers who didn't finish their degree for one reason or another, they didn't finish their degree, but they still have the debt. 40% of them are in default, roughly 3 times more likely to be in default than someone who did finish their degree. Um, Default rates vary across sort of demographic lines in really problematic ways. And a lot of people in default linger in default. They've been in default for over 20 years. Almost a million people have been in default for almost 20 years, 20% of whom have actually repaid more than they borrowed, but they're technically in default. And then over 50% of defaulted borrowers also received a Pell Grant, which means they're low income house. They came from a low income household. So the profile of someone in default sort of varies, but definitely hits some of our more marginalized communities. And then you ask, what are the repercussions of being in default, right? So again, credit reporting when you're delinquent, and then when you're default, the government can offset your benefits. They can take your tax refund. They can take your Social Security benefits. They can take really any of your federal benefits. And they can also garnish your wages. And they can do both of these things without going to court. They just sort of send you a notice that it's going to happen. You have roughly 30 days to sort of raise a legal defense to that. And unfortunately, being low income is not a legal defense. And then they can start to take your money. There's not even a very high protected amount of money. So they can basically garnish, in terms of your benefits, up to 15% of your Social Security benefits, and only have to make sure you have $750 a month, right? So they can basically take your money, leaving you only $750 a month every month until they pay off the debts. The Trump administration planned to double that, to make sure you had over double that, closer to $2,000 a month to live on. But the Trump administration has said it's not going to honor that commitment. And so when they start collecting people's money, which they did this month, they're only going to leave people with up to $750 a month. So the effects of default are really, for lower income people, really dire.
So I think you made it clear it's not good to go in default.
Right.
But as you and I both know, that sometimes that's completely unavoidable.
Yeah.
So if people are facing default, or they're falling behind on their loans and they're worried about defaulting, what are their options? I mean, I think you described before, and when we answer some of these questions, I think that'll be clearer. But you described some of the options before. But what should people do if they think they're moving towards default, or they're already defaulting?
Yeah. So if you are moving towards default, you should look into an income-driven repayment plan to see if that is an affordable way for you to stay in your loans. Again, IDR plans, some of them are available now. You can apply while your application is pending. You can get a forbearance so you don't have to make payments, and then hopefully it is more affordable for you. The If you are a low income person, you might end up having a $0 IDR plan, right? So it's a percentage of your income above the federal poverty line. So for some people that calculates to $0. For some people it calculates to $50. Some people it's $300. It's going to vary on your income and your household composition. If you're married and file your taxes together, if you're married and file your taxes separately, that's going to vary. But that's the first thing to do if you're struggling to make your payments. If you just are having some tough luck, maybe if you're in between jobs and your income is zero, get on IDR because then you don't have a $0 payment, right? If you're zero income, $0. If you have some new medical expenses, right? So your income is the same, but your expenses of your household have gone up. And so suddenly things are unaffordable. Talk to your servicer. You can get some deferment or forbearance time so you don't have to make payment for a few months based on that economic hardship. And they can apply that retroactively. So if you're 4 months behind, they can go back and basically say, all right, we're going to say you've been on a forbearance or deferment for 4 months. So you can get that cleared up on your loan history and no longer be progressing towards default. Now, if you're in default, you basically have two options. One is called rehabilitation, and it's where you agree to make payments that are calculated specific to you. They're generally low dollar, can be as low as $5 for 9 out of 10 months, and they have to be on time, and you have to basically document that you can make payments. The benefits of rehabilitation are that you will get some delinquency time or default time taken off your credit report. They'll fix your credit report for some of the time that you've been in default. The con is that it takes close to a year, right? It takes 9 to 10 months to do. And for some people that just want to be out from under the weight of default, you can continue to experience debt collection while you're doing rehabilitation for up to 5 or 6 months. So that's half a year of having your money taken out of your account or your benefits offset. The other option is what's called consolidation, where you're basically replacing your federal loan or loans with a new federal loan. It's like a refinancing, but with a federal loan. Be very, very careful about scams that tell you to refi your federal student loan, and then they do that with a private loan. And when you have a private loan, you don't have any of these benefits. You have whatever the private lender will let you have, but you don't have any rights to these things we've been talking about: public service loan forgiveness, income-driven repayment. So be very careful. And what you want for your federal student loan to get out of default is a consolidation. So if you're eligible for it, you can consolidate and they basically pay off your defaulted loan and give you a brand new loan for the same dollar amount. And then you can immediately start making payments on the income-driven repayment plan there. Your personal circumstances are always going to matter, but consolidation is going to be the fastest version for you, including if you're already experiencing debt collection, you can consolidate your way out.
Okay, that's a lot.
It is
And
a
we
lot.
do have some questions that we'll get to. Everybody, I'm going to go through the questions, don't worry. But so, I mean, I think what we've heard is that, there's still a lot to be determined about the programs, whether it's because of lawsuits or changes in policy coming down from the administration. There are many things that are still in play. However, I think I'm hearing, and you can tell me if I'm wrong, Winston, there are still options for people to get into affordable payment plans. You need to be very careful about getting into the one that's right for you.
Yeah.
Some will mean that you're not paying interest. Some might mean you are paying interest. So it's very important to look into these programs carefully before you sign up for them. I think the other thing I heard was despite, backlog, despite some slowdown in perhaps processing applications, if you find the right program for you, you should still apply and then stay on top of it.
Absolutely. Absolutely. Yeah. Both because ultimately, if you want to get into it, you have to apply, right? There's just no shortcut there. But also because for the most part, when you apply, you can get put into a forbearance, and that can give you some initial relief from the monthly. Again, during a forbearance, your interest will accrue in general, but you don't have to make a payment. So if your issue is affordability, for most people, it's going to be worth it to apply, wait, a couple months to get into the more affordable plan and accrue some interest, but not have to make unaffordable payments or fall behind on unaffordable payments for a couple months.
Okay. Winston, I'm gonna let you just wrap up and offer some tips, and then I'm gonna kind of go through some of these questions
Yeah.
backwards. So there were some questions specifically about default, PSLF, IDR, but I know you wanted to, there were some things you were gonna kind of wrap up and give people tips. You've covered
Yes.
some of them, but do you want to do that now?
Definitely, that sounds great. And so yeah, well, then we're gonna have plenty of time for Q&A. So first and foremost, you just have to make sure you know what's going on with your loans, right? So go to studentaid.gov, log in. If you don't have a login, make an account, make sure your contact information is up to date. If they're giving you any notices, you need to make sure you're receiving them, that you're opening them. It is not, it's tempting, and I totally get it, but it is not in your best interest to sort of stick your head in the sand and ignore. And I know that for some of you, you may have had really bad experiences interfacing with the federal student loan system, and I get that. I don't want to say it's easy or fun or whatever, but you just have to stay engaged. Otherwise, you're going to fall behind, and they'll just start taking your money. And it's much harder to dig out of that hole than it is to stay away from the hole, right? So that's the thing. File applications when you change your status. Bev just sort of framed it correctly. It might mean you're in a little bit of an application waiting period for a while, but you need to get in the queue, whether that is for an affordable plan or to get your debt completely canceled. There's public service loan forgiveness. There are cancellation programs if you're someone who lives with a total and permanent disability. If you are someone whose school defrauded them, there's all sorts of programs that Congress created that get your debts discharged, but you have to apply for the most part, right? And then if you're pending for a long time, again, I'd file a complaint. In a healthier federal government, I would say file the complaint with the Federal Consumer Financial Protection Bureau, who used to monitor this market on behalf of consumers. They have affirmatively stopped doing that because the Trump administration just said it's not a priority of theirs to protect student loan borrowers. Like pretty candidly, they said that. So as I mentioned, I recommend filing a complaint with your member of Congress through their constituent casework function that all offices have. And again, through New Jersey Citizen Action, we can send a follow-up link to our guide for how to do that. We're hearing from people that that's actually been very effective. And I think it has the dual purpose of getting you the result you need, but also helping your member of Congress who represents your voice in DC understand that this is a problem and making sure that they deal with the bigger problem as well. So that's what I would say in terms of sort of where you can continue to get information. I mean, it's great that you're in sort of orbit of New Jersey Citizen Action. They're a great conduit for getting information to New Jersey residents. In our follow-up, I can also, include some resources, including how you can sign up for Student Borrower Protection Center's emails if you want to stay current on what's going on there. Beverly can talk a little bit about the state of New Jersey does have a student loan ombudsperson at one of the state agencies, and you can file complaints or go to their website as well. But in terms of getting faster action, I do think that going to your member of Congress is going to be one of your better resources when you have an issue.
Thank you, Winston. So what I'm going to do is there were some questions related specifically to default, and then we can move backwards a little bit. And there were some general questions. So somebody was asking about bankruptcy. And again, worst case scenario here, we're talking about, when you're really having trouble. And there's always been questions about bankruptcy related to student debt. So can you answer that question?
Yeah.
Is that a possibility for people?
So with federal student loans, there is a higher standard in bankruptcy to get your debt discharged. And it's a very difficult standard to overcome. You really have to be very really down on your luck, probably experiencing homelessness, if not at the risk of homelessness, to get the bankruptcy court to discharge your federal student debt. It is just very callous and very unfortunate the way that the courts have interpreted this part of the bankruptcy code over years. And there's been a lot of advocacy to fix it, but it's not impossible, but it's harder to do. The Biden administration, the president can't change the laws, right? They can just ask Congress to change the law. So the Biden administration couldn't change the bankruptcy standard, but they did tell the government, who is part of your bankruptcy when you owe the government debt, they told the government to stop contesting it as hard. So it got a little bit easier to get these debts discharged during the Biden administration. And I think it's just too soon to see whether it's getting harder again under the Trump administration. But in general, it's very difficult to do. And so if you're someone who's experiencing bankruptcy, or you think you are a good candidate for it, you should speak with a bankruptcy attorney, but know that it's much harder to get your student loans discharged of bankruptcy than it is your credit card debt or your mortgage even, or your auto loan or any of those other debts.
Thank you. Another question, just quickly, and someone was asking if you're in default, can they come for your pension? Can they come for your property? I think it's like any other debt, but you could say about it specifically related to um, um,
Yeah.
student debt.
So they're going to, through the administrative powers that they have, which means they don't have to go to court, they can offset your federal benefits. So if there are federal benefits that flow to you through the Treasury Department, usually they can offset those, and they can have your employer offset any wages that come to you. That's what they can do without going to court. They can also go to court and get a court judgment, which allows them to get a lien on your home or just take money out of your bank account. So there's ultimately, like any debt, like Beverly said, they can sort of get at your money, but through the non-court fast acting 30 days notice route, if you get federal benefits from the federal government, or if you have a job and an employer who pays you, they can take those funds pretty quickly.
Thank you. So there's some questions here about, how do you advocate for yourself? I'm going to touch on that at the end. But there are a number of questions about PSLF. And somebody says, I have the PSLF with zero payment plan, I guess $0 payment plan. Does that count as a payment?
Yes, a payment on an IDR plan. Well, if your $0 payment is on an income-driven payment plan, then yes, as long as you are properly enrolled in a plan that qualifies for public service loan forgiveness, which is basically just the 10-year plan and the income-driven plan, again, of which there are actually four. It doesn't matter what your monthly payment is. A $0 payment is still a payment for public service loan forgiveness, so you should be fine. If you have not a $0 and you miss a month, that month won't count. If you pick it up again the next month, it will count. But a $0 payment that is properly, your bill says zero, you don't pay anything, that should count toward public service loan forgiveness. And that's where, as Beverly was saying, you can go ahead and submit your employment certification, and however many months you've worked at your employer or past employers, submit it, and then they'll count up and put on your account, on your online account, how many PSLF credits you have towards the 10 years, which is 120 months. And so you can see in real time that $0 payment count towards your PSLF.
Thank you. So someone asked, if I am in the SAVE plan that's now in forbearance, but I want to go back into the repay plan, should I apply for that now? I think the answer is yes, or should I wait until the forbearance ends? When does that end? And I think you said, you could sit back and wait, but go ahead.
Yeah, it depends on what your goals are, right? If you are someone who just wants to be making payments because you're going to have to pay down your loan over time, or you want to get the public service loan forgiveness credit, then you should switch plans. Repay is SAVE, so repay no longer exists. If you were in repay, you are automatically and mandatorily converted over to SAVE. But you can apply for, if you qualify for them, IBR, ICR, or pay. The monthly payment amounts will differ under those and will be different than what you paid under repay. But you can go to student.gov, you can use the student loan calculator they have there, or you can look at the application and see what they preview your monthly payment would be. But yes, if you want to just get back into a payment plan and proceed, then you're going to have to apply and then wait a couple months while they process your application.
Thanks. There's a couple of questions. I think both are related to PSLF, but how do I check on how many payments I left for PSLF, and then how do I finally get my loan forgiveness completed after 5 years of waiting? That might be a check on your status situation. So I think both of those might be, how do you look up how do you get the information about where you stand?
So if you go to student.gov and log in, there should be a PSLF counter on there. There's also a servicer online login, like you might have Mohila as your servicer or Nelnet. You can go there too, and I'd recommend you check both, because I hear occasionally that you might see it on one but not the other. But there should be a PSLF counter, and it'll tell you how many qualifying months you have, and that's you can go. But you're only going to see that if you have already certified your employment, right? Like if you have never submitted a PSLF form that your employer signed off or past employer signed off on, you're not going to have any credit. That doesn't mean you haven't earned credit. They're just not going to show that you've earned the credit. So you have to file that paperwork at some point to see how much credit you have. And then it takes a couple months to process it and post it, but then it's there. Now, if you're someone who has that and you have, applied again to add more months, in theory, if you do it every year, the first year you'll get 12 credits, the next year you'll get 24, then you'll have 36 until you hit 10 years worth, which is 120. So if you're just waiting for your latest application to get reviewed and to have your latest set of months added to your total, and it's been months and months and months, that's where you can file a congressional caseworker request and ask your member of Congress to figure out what's going on. I also saw a related question of and so if someone has 5 years, that something else is going on there, they should, really double check what's happening, or talk to their member of Congress. I've never really met someone who had a 5-year application for public service loan forgiveness. That's before COVID, basically. Yeah.
It seems like something's wrong there.
Something's wrong there. And then I also just saw someone asked in the chat, just seems relevant, I'll clarify. PSLF is not a plan the way that a repayment plan is a plan. You are always going to be in a repayment plan, and most people seeking public service loan forgiveness are in an income-driven repayment plan like SAVE. PSLF is just a program that lets you get your debts canceled. So again, you're never applying to PSLF. You're always just sort of certifying and proving your qualifications under the program. And so to answer the question specifically, no, when you apply for PSLF, you're not getting out of SAVE or out of a payment plan. Your payment plans are how you make your monthly payments, and public service loan forgiveness is a way to get your debt canceled after making the right kind of monthly payments in a public service job. So if you want to get out of SAVE, you've got to apply for a different IDR plan. If you want to get your debt canceled under public service loan forgiveness after 10 years, you have to have been submitting your PSLF paperwork.
There's a quick question about how can I find out if my job qualifies under the public service loan forgiveness?
Yes. So you can go, there is an online tool called the PSLF Employer Lookup, where you can search the tax EIN number for your employer, and it will tell you if that employer has previously been approved for public service loan forgiveness. What that means is, did someone else from your company or your job ever apply? Did they review their application and say, yes, this employer is good? If they don't have a result, it doesn't mean your employer isn't good. It just means no one else in the history of the program from your job has applied, so they've never looked at your employer. If it comes back as rejected, that means someone's looked at it and your employer's not good. Now, that's the way to check. But in practice, if you work for any government, federal, state, county, local, tribal, whatever, and if you work for any 501c3 nonprofit, there's different types of nonprofits, and 501c3 is one of them, you qualify, full stop. Right? That's the law. It's not even the interpretation of the law, it's just the law. And so that's one way, is just, oh, I work for a nonprofit or I work for the government, you qualify. And so even if you look up the employer and it comes back as rejected, they might be wrong. I see this all the time. So that's the rule of thumb, is government or 501c3 nonprofit. And we recommend that you do the form every year, just so that you keep a record of your employment and you track your progress, but it's not a requirement of PSLF that you submit your employment verification each year.
There's a question about are parent loans eligible for the SAVE program? And then there was another question about SAVE, I think about, I'll find it.
Well, I'll answer the Parent Plus for you. The Parent Plus, for those who aren't familiar, is a type of federal loan that you take out for your child. So you're the borrower, but not the student, right? Normally you're the student and you're the borrower. For Parent Plus, you might be a Parent Plus borrower and also have your own student loans, but that's a whole separate thing. So Parent Plus loans, unfortunately, have very few plans that they're eligible for. You can make the standard plan, which is the, how much you owe over a period of time. If you consolidate them, which is that method of taking out a new federal loan to pay off your existing federal loan, then Parent Plus loans can qualify for one of the IDR plans, ICR, but not SAVE. That is pretty much the extent of their repayment options, is consolidate, and you can do ICR, but that's about it. That means that for public service loan forgiveness purposes, a Parent Plus borrower can qualify for PSLF without doing anything. But since PSLF takes 10 years and the parent plus default is to pay it off over 10 years, you're not getting a cancellation benefit because the moment you qualify, you paid off your loan. Or you can consolidate and get into ICR, which after 10 years, you'll likely have a balance left after the lower monthly payments, and you can get PSLF that way.
Someone has a question about how do you apply for the buyback? I guess, so
Yeah. So
you
if you
missed some
go,
payments, you can now make those
exactly.
payments.
So importantly, you can only apply for the buyback when you are close to being done, and the bought back months will get you to 10 years. So you can't just do it on year 5 to get that month from a year ago that you've got. You got to do it when you're basically on the cusp or at 10 years, and the buyback months will push you into qualifying for your debt to be canceled. You go online, the application process is called a reconsideration application. But if you go to the studentaid.gov and the PSLF page there, you can find instructions about the buyback and more of an explanation. But you make a reconsideration application online at studentaid.gov.
There was somebody who said, I have 104, I think, QPs. Can I apply for the PSF buyback payment plan? It sounds like we're closer to the point.
Yeah, so if you're 104, that means you're 16 months, 16 payments away from 120, which is the 10 years worth. If you have 16 months in your payment history that you think are eligible to be bought back that didn't qualify before, then yes. If you don't, then you have to wait. Say you only have 5 months left, then you're going to have to spend another 11 months in repayment until you have 115 payments, and then you can do the buyback for the 5 months that you need to get to the end. So you have to wait until the months you buy back equal the number of months away from cancellation you are.
I think that makes it clear. Is like figure out how many you would be buying back, and that's the numbers left in the months.
Yes.
That you have to pay that you should be start to apply the buyback.
I'll just reiterate that all of this stuff is incredibly confusing. If any of you are thinking, oh, like it's hard, it's confusing, it is hard, it is confusing.
Yeah.
And so this
Alicia
is not
Thompson said it's so confusing. Yes, it is. But I think one of the key things here is that for each of the possibilities, each of the options, take some time, read the information that is available on the the government website, and just read what each program has, because it's going to take you a long time to understand. And if you find the one that that is for you, it will have been worth it. So just take a little time to do that. And most importantly, find out what your status is, try to understand, what situation you're in. So somebody's asking about, there's a lot of questions here about eligibility for PSLF. Someone says they work in a charter school in Newark. It depends on whether the charter school is a nonprofit institution or, some charter schools are for profit. That means that, they would not be eligible.
You got to just check your individual employer. Exactly. Yeah.
You have to look online and find out whether your employer, that EIN number that Winston mentioned, that's employer identification number if you don't know that. So, you've got to get that number and find out if your individual.
That'll be on your W-2, or you can ask your HR department.
Yep. Other people are saying they're, they're social workers, nonprofit. Again, each one of you is going to have to figure out whether each employer you have is in fact eligible.
Yeah, and it doesn't matter what you do at the company. It just matters that you work for them. So it's not like within the same company, one person might qualify, but the other won't. As long as you're a full-time employee, so contract workers, unfortunately, and part-time don't qualify. As long as you're a full-time employee for a nonprofit or a government, you qualify. It doesn't matter what you do. It matters who you work for.
And Winston, correct me if I'm wrong. There's one question about, it says, employer refused to verify somebody's employment. Is there recourse for that? Let's say that the organization or the company is eligible, but they're refusing to verify. Is there recourse for that? Can somebody do something about that?
The verification process is just your employer or qualified, like someone who your employer says can sign the form, signing off that you worked there for a period of time. They are not signing off on your eligibility for the program. They're not signing off on whether you're a good borrower or a good employee or any of that. It is just the company signing off about the fact that you worked there on this start date and this end date, or that you still work there. So if your employer is unfamiliar with it, that's literally, it's a factual question. They're not representing your eligibility for anything else. If you have a bad relationship with your employer, if they are being obstinate, if they're telling you that they don't qualify, so they're not going to even bother signing whatever, there's a little box you can check that says my employer wouldn't sign this, or I couldn't get someone to sign it, but I'm submitting it anyway. I would say try to get someone to sign it because it's faster that way. They don't really do much follow-up verification. But if you do have to check that box because your employer won't sign it, or you can't get them to sign it, or it was a past employer and no one's picking up the phone, they might follow up and ask for supplemental information. So that's a route you can go, but don't think of that box as like the easy way to go. Like really put in the effort and try to get it signed, even by a past employer, because using that box can work, but it might require more follow-up by you.
Thanks. I'm going to do one more question, then kind of we should wrap up here. But somebody just said, I've worked at a charter school in Newark for 6 years. If it's eligible, would that, if it qualifies, would they get those years? You have to be in the program for those years to count. And
Well,
go ahead.
kind of. I just want to clarify. It's not that you have to be in the program. It's never too late to claim past credit. So as long as your employer is eligible, you can submit your paperwork now showing you worked there for 6 years, and that credit will count. We recommend, again, you do it year by year going forward. So in this instance, without knowing any more information, if the school does count, you could submit the paperwork today for the past 6 years. And then we would recommend every year for the next 4 years, do it annually so that you're like showing your year 7, year 8, year 9, and then cancellation. But yeah, so it's never too late. You should just basically, when you are off this call, if you've ever worked for a nonprofit or government, you should just get the paperwork dating back to 2008, because again, the program didn't exist before then, and just document all of it and submit it all.
But to be clear here, you still have to make all of the payments. This could be credit towards the payments, but you have to be making payments
Right. So
to get the forgiveness.
There's independent requirements, and the employment part is what I'm saying. It's never too late. The payment part, exactly. You have to make payments, and now if you didn't in the past, you can use this buyback to go back in time and make the payment. But yes, you always have to have had the same for a month's account. You have to have the right job, the right loan, and make a payment on that month for that month's account.
Thank you. Winston, this has been very helpful. I think both Winston and I understand that no matter what, the system is confusing. But, I think what Winston has, I think helped us understand is that programs still do exist to address whether you can afford to make payments each month. PSLF, the Public Student Loans Forgiveness Program, still does exist. And there are ways for you to, the main thing is to look into what these programs do and find out which one is the best one for you. And the other thing is you have to have some patience with the system, and if you have, some of these things are still going to take some time, but you should not give up, and you should really stay on top of what your particular situation is. I want to make a couple recommendations. Please do sign up for the Student Borrower Protection Center's newsletter. They put updates on there constantly. Citizen Action has a financial coaching program. I see Paula Merck, the head of the coaching program, is on here. They do a lot of work one-on-one with people who have federal student loans and other student loans, can help you try to walk through some of these confusing issues with student loans. And you can reach Paula through Citizen Action. We'll send that information out to you with our follow-up email. And lastly, people were asking about what can they do in terms of talking to their members of Congress. What's most important is that you do tell them what your experiences are. The only way for them to do anything is for them to understand that their constituents are suffering or having problems. And so it's really important for you to report your situation, try to track what your experience has been, if you can, keep a little journal, so that when you have a problem, you can send it to your member of Congress so that they are aware of what is happening to all of you, which is, we know, can be very upsetting and very difficult to navigate. I see Paula just put a telephone number. I think I put a phone number in the chat, which is 962-229-3014. Again, we'll get you this information, in a follow-up email. Thank you all for participating. Thank you, Winston. It's always great to talk to you. I always feel a little better after I talk to Winston because my hair is always on fire about everything related to student debt. And we know that a lot of you still have problems, and it's painful to have to deal with it when there's so much uncertainty. So, Paula's number is 862-229-3014, but we will send it out to you. It's free financial coaching. We don't charge anything. We're running over a little bit, but thank you so much. And for participating in this webinar tonight, for all of you who tuned in, please tell your families and your family and friends to do some of the things that Winston recommended. Look up your status, review and research the different options so that you're not stuck in a situation that's going to make your debt go up or that could cause you to go into default and have worse problems. So, Winston, any last words?
No, just exactly that. Stay vigilant out there, beware of scammers, all that, and we'll work with New Jersey Citizen Action on the follow-up email to put some of these things in links for you.
Thank you, Winston. Thanks, everybody. Have a good evening.